Hi, my name is Pauline Young. I'm a licensed financial planner and I'm also a certified chartist. Today, I would like to share with you some tax planning tips. There are a number of ways you can go about tax planning.
Number 1. Estimate your taxes. Start with estimation of your taxable income for a year. Know your effective tax rate and plan for your tax bills for the year. SME company LLP with paid-up capital less than 2.5 million ringgit, the income tax rate will be 17% for the first 500,000 ringgit chargeable income. If your individual's effective tax rate is higher than 17%, it will be more tax effective to tax the business income under the company or the LLP. On the other hand, if your individual's effective tax rate is lower than 17%, you may want to switch the business income to be taxed under individual through payment of directors' fees, remunerations, and etc. Number 2. Maximization of tax deductions. There are many tax deductions we can utilize. Deductions for personal include self-reliefs, medical bills, computer or digital expenditure, childcare, and many more. Deductions for small business owners include personal property taxes, charitable donations or gifts, and expenses that are directly related to your job. Number 3. Increase your EPF contributions. The employer's portion of EPF will not be subject to personal income tax for the employee, regardless of any percentage contributed by the employer. However, from the employer's perspective, tax deductions can only be claimed up to 19% for the employer's tax purposes. So most of the companies in Malaysia that contribute additional EPF to the employee will not contribute more than 19%, as there is no tax benefit for the company. Number 4. Restructure your remuneration packages. Certain personal expenses can be claimed under the tax deductions. For example, housing accommodation, employee or service director, lower of the 30% of cash remuneration, or defined value of accommodation. For the directors of controlled companies, it will be the defined value of the accommodation. Petrol card, petrol or travel allowances and toll rates, total amount paid by employer, exemption up to 6,000 ringgit per annum if the allowances are for official duties. Child care subsidies or allowances up to 2,400 ringgit per annum is paid by the employer. Parking fees allowances, meal allowances are fully exempted. Interest on loan subsidies, loan totaling 300,000 ringgit for housing, passenger motor vehicles, and education are exempted. Exemptions are not extended to directors of controlled companies, sole proprietors, and partnerships. Number 5. Keep documentation and records. All supporting documents and records to your tax returns need to be kept for 7 years. For receipts or bills that were printed less clearly, do make photocopy. Alternatively, scan and keep the electronic copy for easy retrieval later. Number 6. Get professional help. Consider hiring a qualified accountant and tax consultant to help you plan and prepare taxes effectively. They can also help you to lawfully maximize deductions and reliefs that are specific to your situation, could bring significant savings in the long run.
Thank you for watching. See you next time. Bye.